Here is the closing Schwab market update as of 4:15 p.m. Eastern Time, 15 minutes after market close for Tuesday, August 24th. U.S. equities finished modestly higher as the S&P 500 and Nasdaq both posted record highs, with the latter topping the 15,000 mark for the first time. The energy sector led the way amid a rebound in oil prices, while value and cyclical issues such as financials, materials, and industrials also contributed to the upside. However, the information technology and communication services sectors were mixed to keep the gains in check, and defensively natured issues such as utilities, consumer staples, and real estate continued to give back a recent run. Concerns about the Delta variant appeared to ease as case counts suggest the spread may be peaking, and following yesterday's full FDA approval of Pfizer's and BioNTech's coronavirus vaccine. Fed tapering uneasiness seemed to cool as the Fed's key monetary policy symposium, slated for the end of the week, has been changed to a virtual affair instead of the typical gathering in Jackson Hole, Wyoming. In equity news, Palo Alto Networks and Best Buy rallied after both reported better than expected quarterly results. On the economic front, new home sales rose more than expected, but regional manufacturing growth noticeably missed forecasts. Treasuries were lower, lifting yields, while the U.S. dollar and gold were both little changed. European markets finished mixed as sectors continued to diverge, while stocks in Asia extended yesterday's bounce. The Dow Jones Industrial Average rose 31 points or 0.1% to 35,366. The S&P 500 index gained 7 points or 0.2% to 4,486, and the Nasdaq Composite increased 77 points or 0.5% to 15,020. In moderate volume, 782 million shares were traded on the New York Stock Exchange, and 3.8 billion shares changed hands on the Nasdaq. WTI crude oil advanced $1.90 to $67.54 per barrel. Elsewhere, the gold spot price ticked 30 cents higher to $1,806.60 per ounce. And the dollar index, a comparison of the U.S. dollar to six major world currencies, lost 0.1% to 92.89. In equity news on Tuesday, Palo Alto Networks, ticker symbol PANW, reported adjusted fiscal fourth quarter earnings per share of $1.60, above the $1.43 FactSet estimate, as revenues rose 28% year over year to $1.2 billion, roughly in line with the street's forecast. The cybersecurity company said it delivered strength across all key total shareholder return drivers, top line, operating margin, and free cash flow conversion, as it executed its strategy of product innovation, platform integration, business model transformation, and investments in its go-to-market organization. Palo Alto Networks issued first quarter earnings per share guidance that missed forecasts, but its revenue outlook was above estimates and its full year projection was north of expectations. Shares rallied over 15%. Best Buy Company, ticker symbol BBY, posted adjusted second quarter earnings per share of $2.98 compared to the street's forecast of $1.89, with revenues rising 19.6% year over year to $11.9 billion, exceeding the forecasted $11.6 billion. Second quarter same-store sales grew 19.6% year over year, north of the estimated 17.2% increase. The company said customer demand for technology products and services during the quarter remained very strong, and demand was also bolstered by the overall strong consumer spending ability, aided by government stimulus, improving wages, and high savings levels. Best Buy issued third quarter guidance that topped expectations, and it raised its full year same-store sales outlook. Shares were nicely higher. The stock markets rebounded for a fourth straight session, with value and cyclical issues such as financials, materials, and industrials continuing to bounce back from some recent weakness, with energy noticeably snapping back along with crude oil prices. However, defensively natured sectors such as utilities, consumer staples, and real estate gave back some recent gains. Schwab's chief investment strategist, Liz Ann Saunders, delivers her latest article, You Take My Breath Away, Markets Underlying Deterioration, discussing how as summer winds down, we soon head into September, historically the worst month for stocks in terms of average performance. She notes that aside from seasonality, there are several risks with which the market is confronting, including deteriorating breadth, fading monetary and fiscal stimulus, peak earnings and economic growth rates, and of course the Delta variant. Individually or collectively, though, they should not be taken as a get out message. For stock pickers out there, we would recommend a focus on quality via factor screening, both within growth and value indexes. Liz Ann adds that the important disciplines to heed in the current environment are diversification, both within and among asset classes, and periodic rebalancing. With regard to rebalancing, it is one of the most beneficial disciplines in that it focuses us to do what we know we're supposed to do, add low and trim high. She points out how she adjusted that from the classic buy low, sell high adage, which can infer an all or nothing strategy. Liz Ann concludes by saying investors should never think of investing as either get in or get out, as that is gambling on moments in time, while investing should always be a disciplined process over time. Amid this backdrop, Director and Senior Investment Strategist with the Schwab Center for Financial Research, David Kastner, offers his latest Schwab sector views too early for defensive positioning, noting how despite recent bouts of sector leadership rotation, we don't expect defensive sector outperformance to last. You can find all our market commentary on our Market Insights page at www.schwab.com, and you can follow us on Twitter at Schwab Research. In economic news on Tuesday, new home sales rose 1% month over month in July to an annual rate of 708,000 units, above the Bloomberg forecast calling for a rate of 697,000 units, and compared to June's upwardly revised 701,000 unit level. The median home price rose 18.4% year over year to $390,500. New home inventory rose to a 6.2 month supply at the current sales pace from the 6 months level in June. Sales in the West moved solidly higher month over month, and sales in the South nudged higher, but sales in the Northeast and Midwest both fell. Shares in all the major regions were down solidly compared to the same period a year ago. New home sales are based on contract signings, offering a timelier read on housing activity compared to the larger contributor of existing home sales, which are based on closings. Schwab's Liz Ann Saunders notes in her article, Gimme Shelter, Housing's Surge a Turning Point, how the pandemic's impact on the housing market has been significant, but appears to be fading as an influence. She points out that what does not appear likely is a housing bust akin to what triggered the global financial crisis. She adds that we would not be surprised to see sales and or prices continue to come off the boil, but housing affordability remains generally healthy and mortgage rates remain historically low. Were home prices to resume their ascent higher or mortgage rates begin to creep higher, she notes that housing affordability would likely suffer. Liz Ann believes what is likely, though, in the near to medium term is for building activity to accelerate in the interest of boosting inventories to meet demand. One of Liz Ann's economic theses, amplified by the effects of the pandemic, is for the U.S. economy to begin shifting toward being more investment-based and perhaps less consumption-based. She points out that residential investment is likely to be a key component of the investment story that's set to be told. The Richmond Fed Manufacturing Activity Index slowed much more than expected, but remained in expansion territory with a reading above zero for this month. The index fell to 9 from July's 27 reading, and versus forecasts calling for a decline to 24. Growth in new orders and order backlog slowed decisively, and employment expanded at a slower rate, and prices paid remained elevated, though growth in wages accelerated solidly.
Treasuries were lower as the yield on the 2-year note was little changed at 0.22%, while the yields on the 10-year note and the 30-year bond rose 4 basis points to 1.29% and 1.91%, respectively. Treasuries paused yesterday after the Treasury yield curve has flattened recently and the U.S. dollar gave back some of a rally as of late, with the markets assessing mixed economic data, uncertainty regarding the timing of Fed tapering, and the ultimate impact of the Delta variant. Schwab's chief fixed income strategist, Kathy Jones, and senior fixed income analyst, Christina Schaefer, offer their latest commentary. Fed tapering, will it be different this time? Noting that although the prospect of the Federal Reserve tapering its bond purchases has unsettled markets in the past, we expect it to be more orderly this time around. Reports slated for release on tomorrow's economic calendar include preliminary durable goods orders forecasted to have declined 0.3% month over month, while ex-transportation and orders for capital goods ex-aircraft are both estimated to have gained 0.5% month over month. MBA mortgage applications for the week ended August 20th will round out the docket. In international news on Tuesday, European equities finished mixed following yesterday's broad-based advance that came from positive developments out of the U.S. on the vaccine approval front, which lifted cyclically natured sectors. Energy issues added to yesterday's bounce back as crude oil prices continued to regain some footing after a recent sell-off. Materials issues also extended yesterday's gains, but healthcare issues weighed on the markets along with real estate. Bond yields in the Eurozone were mixed, and rates in the UK were nearly flat. The economic calendar in the region was relatively light, but Germany's second quarter GDP growth of 1.6% quarter over quarter was revised to a slightly higher pace of expansion than previously reported. The euro and British pound were little changed versus the US dollar. Schwab's chief global investment strategist, Jeffrey Kleintop, discusses in our latest Schwab Market Perspective the next phase, how the rebound in earnings has lowered stock market valuations slightly from their peak of a year ago, as measured by ratio of price and earnings estimates for the next 12 months, or forward PE ratio. But the relative undervaluation of international stocks has widened. Jeff discusses how the result of the wide gap in valuations between U.S. and international stocks, with similarly strong earnings growth across regions combined with more attractive valuations, could provide a basis for international stock market outperformance. The UK FTSE 100 index rose 0.2%, France's CAC 40 index and Switzerland's Swiss market index decreased 0.3%. Spain's IBEX 35 index was down 0.2%. Italy's FTSE MIB index ticked 0.1% lower, and Germany's DAX index rose 0.3%. Stocks in Asia continued to rebound for a second session, with a rebound in Chinese technology helping lift the markets after a recent sell-off in the sector weighed on performance in the region as China ramped up regulatory crackdowns. Schwab's Jeffrey Kleintop offers his latest article, Is China's Bear Market an Opportunity?, noting that China's stock market pullback this year has been in line with the average annual drawdown. However, the recent drop seems to be driven by a regulatory crackdown, not an economic slowdown, with the market not responding to the economic outlook, but to the policy uncertainty. The fully approved coronavirus vaccine in the U.S. yesterday also seemed to aid the markets, while the noticeable pullback in the U.S. dollar likely lent some support. Economic data in the region showed Japan's department store sales rebounded solidly in July. Japan's Nikkei 225 index advanced 0.9%, even as the yen firmed up a bit, and China's Shanghai Composite Index rose 1.1%, while Hong Kong markets led the way with the Hang Seng Index rallying 2.5%. South Korean markets also stood out as the Kospi Index jumped 1.6%, while Australia's S&P ASX 200 Index nudged 0.2% higher, and India's S&P BSE Sensex 30 Index traded 0.7% to the upside. Tomorrow's international economic calendar will again be light, offering only the leading index from Japan and the IFO Business Climate Survey from Germany.